Hey everyone, and welcome back to the channel. In the last video, we talked about why silver is breaking records in late 2025, the real drivers behind the rally, from industrial demand to macroeconomic forces. Today, we're diving deep into a topic that's on every precious metals investor's mind, silver. Specifically, we're going to unpack what these much talked about supply deficits really mean for silver prices. And the big question, if silver's price skyrockets, can you actually sell it at the peak? Let's get into it. So you've probably heard the term supply deficit a lot lately. What does it actually mean? It's simple economics. A supply deficit happens when the demand for silver is higher than the amount being mined and recycled. For silver, this isn't just about coins and bars. Over half of all silver demand comes from industrial applications. Think solar panels, electric vehicles, 5G technology, and all sorts of electronics. This industrial demand is growing fast, and it's not very sensitive to price. A company making a $100,000 EV isn't going to stop production because the price of silver and its components went up a few bucks. At the same time, silver mining output has been relatively flat, and in some years, it's even declined. Getting new mines operational is a long, expensive, and complicated process. So, when you have rising inelastic industrial demand on one side and a constrained supply on the other, you get a deficit. The market has to make up this shortfall by drawing down existing above-ground inventories, like those held in vaults and ETFs. Historically, prolonged deficits tend to put significant upward pressure on prices. It's not a guarantee of a price explosion tomorrow, but it creates a very strong fundamental floor under the market and sets the stage for a potential major repricing event. The longer this deficit continues, the tighter the physical market becomes, and the more likely we are to see a substantial price move. This leads us to the million-dollar question. Or maybe the $80 an ounce question, can you sell at the peak? Let's imagine a scenario where silver's price is rapidly climbing. It's on the news, everyone's talking about it, and you're seeing your investment grow daily. The natural instinct is to think, I'll just sell at the very top and cash in. But it's not that simple. First, identifying the exact peak is nearly impossible. Markets are driven by human emotion, fear, and greed. In a parabolic move, prices can go far higher than anyone thinks is rational. If you sell too early, you could miss out on substantial gains. If you wait too long, you could watch the price crash back down just as quickly. Trying to time the absolute top is a recipe for stress and often disappointment. A better strategy is to have a plan. Decide on your price targets before the mania begins. Maybe you decide to sell 25% of your holdings at a certain price, another 25% at a higher price, and so on. This is called scaling out. It allows you to lock in profits along the way without trying to be a market timing genius. Now, let's address a common concern. If the price of silver goes vertical, will you even be able to sell it? Will dealers still be buying? This is a crucial point. Will it be difficult to sell your silver in a mad rush? The short answer is, it depends on what you have and who you're selling to. If you're holding physical silver coins and bars, especially well-recognized government-minted ones like American Silver Eagles or Canadian Maple Leafs, you will almost certainly find a buyer. Reputable local coin shops and large online bullion dealers make their money on the spread, the difference between the price they buy at and the price they sell at. In a hot market, their business is booming. They want your silver because they have a long line of customers desperate to buy it from them. However, there could be logistical challenges. If everyone is trying to sell at once, you might face delays. A dealer might have a daily limit on how much they can buy because of cash flow or security concerns. They might offer a price slightly below the absolute spot price to account for their own risk and the high volume. This is why having a relationship with a trusted local dealer can be invaluable. They know you know them, and the transaction is likely to be much smoother. Selling obscure or generic silver rounds or very large industrial bars might be a bit more challenging. Dealers will always prefer the most liquid and easily verifiable items. So the type of silver you hold matters. But the idea that no one will want to buy your silver when the price is high is generally a myth. In fact, that's precisely when demand from new buyers is at its most frantic. The real difficulty isn't finding a buyer. It's the psychological challenge of deciding when to pull the trigger and sell. So, what are the current trends and potential unforeseen problems we should be watching for? The industrial demand trend is undeniable and accelerating. The green energy transition is silver intensive. The AI boom requires massive data centers which use silver. This isn't a speculative bubble. It's a fundamental shift in demand. On the supply side, we're seeing increasing geopolitical instability in major silver-producing regions like Mexico and Peru, which could disrupt mine output unexpectedly. An unforeseen problem could be a black swan event. For example, a major financial crisis could cause a rush into physical assets, pushing silver prices up dramatically. but it could also lead to logistical gridlock in the financial system, making transactions of any kind difficult for a short period. Another potential issue is a sudden change in regulations. While unlikely, governments have historically taken drastic measures during monetary crises, including actions related to precious metals. It's something to be aware of, even if it's a low probability risk. A more subtle trend to watch is the inventory level in major vaults like the COMEX and the London Bullion Market Association. As these stockpiles continue to be drawn down to meet the supply deficit, we get closer to a tipping point. When the registered category on the COMEX, which is the silver available for immediate delivery, gets critically low, things could get very interesting very quickly. This is the canary in the coal mine for the physical market. All right, let's summarize the main takeaways from our discussion today. First, the silver supply deficit is real, and it's driven by powerful long-term industrial demand that isn't going away. This creates a strong fundamental case for higher silver prices over time. It's not a short-term trade, it's a long-term trend. Second, trying to sell at the absolute peak is a fool's errand. A much smarter approach is to have a predetermined exit strategy. Decide on your price targets in a calm market and consider scaling out of your position in stages to lock in profits as the price rises. This removes emotion from the decision-making process. Third, in a high-price environment, you will be able to sell your silver, especially if you hold recognizable government-minted coins or bars. Reputable dealers will be eager for your metal to meet overwhelming buyer demand. The challenge isn't a lack of buyers, it's the logistics and your own psychology. Build a relationship with a good dealer now, before the rush. And finally, keep an eye on the big picture: the unstoppable industrial demand, geopolitical risks to supply, and the dwindling inventories in major vaults. These are the key indicators that will tell you where the market is headed. Silver is in a fascinating position. The fundamentals have arguably never been stronger. But investing is never a sure thing. Do your own research, create a plan, and stick to it. The journey with silver is likely to be a volatile one, but for those who are patient and prepared, the potential rewards could be significant. Thanks for watching, everyone. If you found this video helpful, please hit that like button, and be sure to subscribe for more deep dives into the world of precious metals. Let me know your thoughts on silver in the comments below. Until next time, stay safe and invest wisely.